Let's do another Jenny move. You sold Toyota.
Right.
Talk to me. Why?
Okay, so it was really paired up. This is in our international income strategy. So we sold Toyota, which is trading at 11 times earnings with a 2.5% dividend yield. We bought Mercedes, trading with a 6 times multiple and a 7.5% yield. I think it's really interesting. If you look at Toyota, they've been a huge beneficiary of the hybrid, the EV, but they've also mostly been a huge beneficiary of a lower yen, which has really, really improved their earnings and sales. So you take that and you step back and you look at the EV world and you know the EVs are more expensive to make and you kind of take a holistic view and you say, you know what, I think the luxury makers are going to handle the EV transition better because it's easier to pass on the costs, the increased costs of EV when you're selling an $80,000 vehicle versus a $25,000 vehicle. Meanwhile, you've got these totally divergent, similar companies and that they both are autos, but totally divergent valuations, totally divergent geographies. And so then you also can see that further putting the wind at the back of Mercedes, our rate cuts will be beneficial for them and a stabilizing European economy. So it was a pretty easy trade. Just like that to me was just simple, decent portfolio management. Okay,
the other sort of portfolio management that we have reverts back to the opposite of what we've been discussing in terms of small caps and mid caps, and that's back to the momentum trades taking a breather, like Nvidia, for example. Who knows about Meta, but you've trimmed both, Brenda, Nvidia and Meta. So you're joining what is now a growing and long list of those who come on the program here and say, I took some off the top of Nvidia. Talk to me.
Yeah, so last Friday, for the majority of our clients, we trimmed both Nvidia and Meta, as you mentioned, and I think nothing fundamental has changed for either company. It's just recognizing the hype in the numbers, and especially if we look at Nvidia, you could argue the earnings outperformance has been phenomenal. But what our concern is, what if Nvidia just reports an inline quarter? And even if we look at the concentration
the nerve, could you imagine?
If we look at the concentration of what's been driving Nvidia's business, it's estimated that 19% of revenue is coming from one customer over the last year. Still think fundamentals are great, but think it's worthwhile to trim some. Meta, similar story, where this has been a phenomenal change from a management style and focusing on profitability. Tremendous job. Earnings are increasing. The multiples increased too, and I think that some of that is warranted. But when we look at what's happened over the last year, stocks up almost 200%, taking some off the top and recognizing that there are other opportunities out there.
Yeah, Josh, I mean, the target today goes to $1,000 at Wedbush. That's up from $850. I mean, so when the target gets run over, you raise it. That's how it's been. Bernstein says we think you should still be in Nvidia, which remains the best way to play AI. Numbers appear set to continue inflecting higher, and surprisingly attractive valuation. They're not, naive to where the valuation has come, but they consider it attractive. By the way, Monday, Tuesday next week, you have the festival that Nvidia is having. So it's interesting to see the movement in the stock ahead of what's going to be a big event on AI next week for that company.
So I was sitting with a trader from one of the biggest banks who sits in the middle of a lot of flow, and the conversation was really not, is Nvidia fundamentally still strong and going to remain strong this year? The conversation is how many years of demand have been pulled forward, because clearly, like the acceleration that we've seen, not just in sales but in margins, like a typical company isn't able to triple their revenue and have margins go from 20 to 50%. That's not how economics work. Okay, so we all know it's an extraordinary story, but are they now selling units that ordinarily they would have been selling in calendar 26 and 27? Because basically, if you don't have the GPUs, you can't build anything. And if you can't build anything, you might as well be out of business in the tech world. Like that mentality of buy something now or we're going to the next name on the list, and you're basically out of the AI race. Okay, that's awesome. We're all having a lot of fun in these stocks because of that. How long can that persist, and how many years worth of demand are being pulled forward? To me, that is the only debate worth having on Nvidia. No one's debating the strength of the company, the fundamentals, competitive position, the brand, et cetera, et cetera. That's it. Are we now pricing in 3 years from now into this current quarter? I don't think that that's sustainable, quite frankly. And I'm saying this as a long.
No, I know it. Very long. It's one of your largest positions. We know you're in Meta.
Right.
Maybe we don't spend enough time talking about Meta and the extraordinary.
Is Meta their second biggest customer, by the way?
That it's had.
I don't know.
You know,
Is Meta Nvidia second? Yeah.
I'm pretty sure.
I think so.
Meta goes from its worst year in 22 to its best year in 23.
Right. And you know, we've trimmed along the way, but it's really the point Josh made at the beginning of the show exactly, which is these are being used as ATMs. And it's not because there's anything wrong with the company.
Right.
It's because you've gone from a 3% position to a 9% position. You know, and you just take some off, and how fantastic. You get to repurpose it, but you're still holding a 5% position.
This is a crazy question. You remember how bad Meta was as a story, as a stock, people crying about it at its low. Is Tesla setting up to be the next Meta? It's now in a totally 50% drawdown from its high. Nobody will say anything positive about it on Wall Street.
It's down another 4% today. Okay. It's down 7%.
All right. Meta was cheaper at its low than Tesla is now. We agree.
16 times earnings. When it was at $89 in November of 2022, it was trading at 16 times earnings with like 29% earnings growth ahead. That's complete.
It's also in a 70% drawdown, not 50.
Okay, but here's the other thing too. The barriers to entry at Meta are far greater than the barriers to entry at Tesla. Look at BYD, look at Rivian, look at like the comments I just made on EVs and Toyota. Like everyone's
Jenny,
coming
those are penny stocks.
It's true by comparison.
That's not.
But you can't.
Meta competes with TikTok. That's not a nonsense competitor.
You can't consider Rivian a real competitor to Tesla.
Everyone can make an EV. Everyone is making an EV.
Yeah, but they don't.
The competition for Tesla is what's coming from China right now.
Charger network.
That's the issue.
Is
the repurposing of manufacturing in Mexico potentially. Have you seen the Mexican peso recently? Not to get off track here, but the Mexican peso is just going straight up because of what can take place in Mexico from a building standpoint.
You don't own Tesla, right?
I do own Tesla,
you do.
But we own it from about 190. We entered it after earnings and
so
after
it's at
stabilizing.
160.
Yeah, it's not 160 yet. 160 is my level.
Excuse me.
Is my level. Now, some people would sit here and criticize me for saying, "Oh, I will manage my risk below 160." No, as a manager, what I would do is start to trim the position on a close, ideally on a weekly close below 160, and that's a breakdown level for me. I will be watching it very closely, and as a trader, have no problem putting the position back on once I feel more comfortable, even if it's at 180 again, because it's sized properly within our portfolio. That's the key here for people that are sitting here with their main position, the centerpiece of an entire portfolio. For the viewers out there, you have to manage your risk in something. For us, it's in the bottom half of our portfolio, and I like it from a value, maybe not in numbers, not a balance sheet value, but from where it's been technically and what I see going forward.
Okay. You like the technicals in it right now?
There's a descending trend line that is 160, and it's bounced off it before. If it can perform that, plus about a year ago it was bottoming at that range there. So a lot of volume has traded in that 160 range. I need to see a response on that 160.
I think it's interesting when you're talking about small cap and small cap from a technical perspective, and I'm talking about small cap from a very fundamental perspective, where I'm finding lots of value and compelling opportunity in small cap when I'm looking at multiples and valuations and the stories. But on Tesla, it's interesting because I get you from a technical perspective, but from a fundamental perspective, I think it's nearly impossible to make an argument, even at 160, that Tesla is compelling. Like the math just doesn't work. The valuation just isn't
humanoid robots, Jenny.
Yeah, but you know what I heard this morning on the radio? I was listening to CNBC driving in, and they were talking about, like, what if he starts creating those outside of Tesla? You know, so much of that valuation.
No, I was just joking.
Yeah, I know, but it's real, actually, right?
Yeah.
So much of that valuation at Tesla is on the hope that they do things like that, and he could easily just spin that off into
right now. It's getting priced as a car stock, an automobile stock.
No, it's not.
That's why it's dropping. But before, when it was trading 200 plus, and pushing towards $300, it was a software stock. I still think it has the software attributes, and that's why we're in it. I like what it has going forward from an EV standpoint, but that's not the main reason we're in it.
But to be clear, if it were priced like an auto company, it would be down like 90% from
that's why it's
times revenue.
That's why it's going straight down here the last 2 weeks.
Well, it should go straighter.